Hello everyone, my name is Georgia. I'm a junior legal advisor at Eltoma Corporate Services. I would like to welcome you to another Eltoma webinar. My presentation today will cover the basics of the Cyprus tax system. So the following topics will be covered: the personal income tax, the special contribution, the corporation tax, the back-to-back loans, the annual levy paid by companies, the special deferred contribution tax, and the capital gains tax, and finally, the immovable property tax. To start with, the personal income tax. The Cyprus income tax law divides the individuals into the two below groups. First one is the residents in the Republic, which includes individuals who stay in the Republic of Cyprus for a period of periods exceeding the aggregate 183 days in the year of assessment. These people group under these residents in Cyprus, they're charged to a tax on their worldwide income. The other group is the non-residents or resident outside the Republic, which includes individuals who do not fit at the above definition. These kind of individuals are charged to tax on their income occurring or arising in respect of income from any trade, business, profession, or vocation carried on or exercised as far as attributable to a permanent establishment in Cyprus, on profits or other benefits from any office or employment exercised in Cyprus, any pension as a result from a past employment exercise in Cyprus, and there is an exception of any pension paid out of funds created by the government or a local authority. Also rents on properties situated in Cyprus and a trade goodwill from sources within Cyprus. This table includes the progressive income tax rates for individuals for personal income tax. And essentially, it can be said that all benefits received by an employee for work or services rendered out constitute taxable income and are therefore subject to the progressive tax rates indicated in the table here. So up to until 19,500 euros, there is no tax rate. From 19 to 501 till 28,000, there is 20% tax rate, and so on, as on the table here. Moving on, it is very important to consider that there is a special exemption for employees. This exception states that 20% of the emoluments of any employment which is exercised in Cyprus by an individual not resident in Cyprus, they are exempted before taking up employment in Cyprus, or there is a euro or a euro 8,543 euros, whichever is the lowest, it can be extended from the income tax. It has to be noted that this exemption applies for a period of 3 years, commencing from the 1st January of the following year of the commencement of such employment. There is illustrated an example. Our slide here illustrates an example of this exemption. You can have a look. So when there is 5,000 euros, there is less 800, 500. So the income tax due will be 7,020 euros. And there also the second option with the 20% mentioned before, where the income tax due will be 10,000 euros. Moving on, in regards of foreign pensions, in respect of services rendered abroad, can be calculated either on normal bonds or taxed separately, which means not other or any other income such as rental incomes. In terms of rates, the first 3,420 euros are tax-free, and then a 5% applies to foreign pensions. Moving on, it has to be noted that a remuneration derived from the rendering of salaried services outside Cyprus to a non-resident employer or to a permanent establishment situated outside Cyprus of a resident employed for a total aggregate period in the year of assessment for more than 19 days, this will be exempted from tax. And this is known as the 90 days rule exemption. So on the same area, the following are the tax deductions for individuals in respect of the personal income tax. So on rented property, there's 20% off the rents on rented income and the full deduction on interest paid in respect of rented property. There is a full deduction on subscriptions to unions or professional associations, a full deduction for donations to approved charitable institutions, supported by receipts, of course. In respect of contributions, there is a full deduction when discussing about special contribution for employers, the self-employed and pensioners in the private sector, and also for special contribution for officers, employers, and pensioners in the public sector. As regards the social insurer contributions, life insurer premiums and contributions to approved provided funds, pension funds or medical funds, then deduction can be up to 1/6 of the taxable income and before the deduction of these allowances. Also, when there is a loss of current year in previous years, this is for individuals required to prepare audited financial statements. Current year losses and losses of the previous 5 years only may be deducted in full. So also expenditure incurred for the maintenance of a building in respect of which there is in force a preservation order up to 1,200, 1,100 or 700 euros per square meter, and this will depend on the size of the building. Speaking about life insurance, it should be taken on the life of the taxpayer, but not on the life of his or her spouse. So the allowance granted for insuring the life of a spouse is still valid for policies affected before 1st of January 2003. The annual premium are restricted to 7% of the insured amount. In the case of cancellation of the life insurance policy within 6 years from the date of its issue, a percentage of the premiums which is previously allowed is taxable as following. It is cancellation within when the cancellation is within 3 years, there is a 30%, but when the cancellation is within from 4 to 6 years, there is a 20% deduction. And finally, the cost for the purchase of shares in an immovable business, the deduction is restricted to 50% of the taxable income after deductions, and this is on the tax year in which the expenses are incurred. 150,000 euros per year. This is a choice between the 50%, the 150,000 euros, which is the lowest, applies. And any restricted costs can be carried forward and utilized over the following 5 years. So next on, it's a special contribution in respect of the tax system in Cyprus. And this is a percentage levied on the gross earnings and the relevant bands, and it is applicable rates from the 1st of January 2014 up to the 21st of December 2016 are as illustrated on the table in our slide. So it's up to 1,500. There is a 0 special contribution from 1,501 and until 2,500. There is a 2.5%, and so on. Next on is the corporation tax. As discussed before, the basic provisions in the area of tax in Cyprus provides that Cyprus tax residents are taxed based on their worldwide income, whereas non-residents are taxed on their hand or taxed on their income through permanent establishment in Cyprus and certain income arising from sources in Cyprus. It should be noted that foreign taxes paid can be credited against the corporation tax liability. So there are several issues to discuss in respect of corporation tax. First one is the company residency. This term means a company whose management and control is exercised in the Republic of Cyprus. So when we were talking about management and control, it is considered as where the majority of the directors reside, where the board meetings of the company are met and take place, and where the General Assembly and the general policy of the company is formulated. In order to have a management and control, all the above criteria must be discussed, and it has to be in respect of Cyprus in order to consider that the company has management and control in Cyprus. The corporation tax in Cyprus is one of the lowest, with 12.5%. And there are several types of income that are accepted, such as the profit from the sale of securities, the dividends in full, interest not arising from the ordinary activities or closely related to the ordinary activities of the company, and the profits of permanent establishment. The corporate tax deductions for expenses needs to be considered in this area. The net royalty income from old intangible assets, as well as the net profit emanating from the disposal of intangible assets, has a 10% deduction. Donations to approved charities are deducted in full. Employers' contribution to social insurance and approved funds on employee salaries, the whole amount is also deducted. Any expenditure incurred for the maintenance of building in respect of which there is a preservation order up to 700, 1,100 and 1,000 or 1,200 euros per square meter. There is, depending on the size of the building, there is also tax deduction. And the entertainment expenses for business purposes, the lowest number to be considered is 17,086 euros, or 1% of the gross income of the business. This is also deducted. And finally, the interest expenses incurred for the direct or indirect acquisition of 100% of the shares capital of a subsidiary company. In this area, the whole amount of interest expense, if the subsidiary does not own any assets not issued in the business, and there is also restricted amount of interest expense if the subsidiary owns assets not issued in the business. There are not allowable expenses, though, in respect of corporation tax. This is the expenses of a private motor vehicle, interest payable to the cost of acquiring such a private motor vehicle, irrespective of its use, and to the cost of acquiring any other asset not used in the family. The whole amount of 7 years from the date of acquisition of the asset, it's not allowable. Losses carried forward. This is to be considered also because the tax loss incurred during the tax year and which cannot be offset against other income, it can be carried forward subject to conditions, importantly, and set off against the profits over the next 5 years. Next on, it should be noted the introduction of notional interest deduction, NID, on qualified equity. This is because companies that obtain fresh equity or capital will be able to claim notional interest deduction, which can be up to 80% of their income, taxable income, reducing more overall effective tax rate as low as 2.5%, considering the 12.5% corporate tax. The way the NID it's calculated, it's qualifying equity and the reference rate. The notional interest will be deductible according to the same rules as actual interest expenses. And finally, the foreign exchange differences. Gains, the foreign exchange gains and losses, actually, irrespective of whether they're realized or unrealized, and of the purpose for which the funds in a foreign currency have been used for, will no longer be taxable or tax deductible. And this will only apply for companies trading in foreign currencies and related products. On the same area, on corporate tax, it should be the following should be also be considered. The anti-avoidance provisions for hybrid instruments and artificial transactions for dividends. So the EU parent and the EU parent or subsidiary has been amended last year to exclude hybrid instruments from the provision of the directive, since they result to double no taxation. The extension of the period of accelerated depreciation of tax purposes has been extended to cover also 2015 and 2016. The group loss relief, based on the amendments, a company tax resident in a EU member state can surrender its taxable losses to another group company tax resident in Cyprus, and vice versa, provided that the chances of surrendering or carrying forward the losses in the member state of residence of the surrendering company has been exhausted. And finally, on this area, a number of avoidance provisions has been introduced, which all give the right to the tax commissioner to refuse to accept tax-free reorganizations. So if the commissioner can demonstrate that the main purpose or one of the main purposes of the reorganization is the reduction, avoidance, and the deferment of payment of tax. So next area to cover is the back-to-back loans. There are several conditions to be covered to be met in order for a loan to be back-to-back. So the first one is that the loans must be made between associate parties. There must be a full matching of the amounts borrowed and granted. The ultimate shareholders of all companies involved must be non-tax residents in the Republic of Cyprus. The loan borrowed and lent can be either interest-free or interest-bearing, and the time interval between the date of the company received the loan and the date it grants the loan must not exceed the 6 months. The profit margins in this area is as illustrated on the table. So when there is a less than 15 million euros, there is a profit margin of 0.35% and so on, as illustrated in the table here. Annual levy. So a payment of this annual levy must be made by companies registered in the Cyprus company register. So all companies registered in Cyprus must be paid the amount of 350 euros as an annual levy. And in the case of a group of companies, the total amount payable it can be capped to 20,000 euros. It is payable as set into the register of companies by the 3rd of June each year. And a late payment of the levy gives rise to the following penalties. So it will be in case for up to 2 months delay, there is a 10% penalty. When there is a delay between 2 to 5 months, there is a 30% penalty. It is important to know that the no payment levy may result in the registration that is known as a forced strike-off of a company by the Cyprus Register of Companies, And if a company is reinstated within a 2-year period from its strike of a fixed penalty of 500 euros in addition to the outstanding amount of the levy, it is imposed to the company. A fixed fee will be increased to 750 euros where the company is reinstated after a 2-year period. Moving on, the special defense contribution. This is the rates are illustrated. It will be discussed later on what is the special defense contribution. The rates for this area are illustrated in the table here. So when there is a dividend income from Cyprus tax residents of companies, for individuals there is a 70% tax. For legal entities there is no. When there's dividend income from a non-Cyprus tax residence in Cyprus, there's 70% again, and 0 for legal entities. There is 0% for individuals and legal entities for interest income arising from their ordinary activities. Other interest income, there's a 30% percentage of tax, and the rental income 3% for both individuals and legal entities. So, for the purposes of the Special Defense Contribution Law, a person is deemed to be domiciliated in Cyprus, in the Republic of Cyprus, if it has a domicile of origin in the Republic and a domicile of choice. When there is no domiciliate, a person who has acquired and maintained a domicile of a choice outside the Republic, provided he was not a tax resident of the Republic for any period of the last 20 consecutive years before the tax, or a person who was not a resident in the Republic, as defined in the provisions of the income tax law for any period of the last 20 consecutive years immediately before this law came to force. When a person is 70 to 20 years resident in Cyprus, it is considered to be have a domicile in Cyprus. The exception also for special defense contribution will not apply where any asset that may give rise to special defense contribution can be transferred from an individual domiciliated in Cyprus to an individual which does not have a domicile in Cyprus. And this is where one of the main reasons of the transfer was to benefit from the exception. So in such a case, special defense contribution will be imposed on the income derived from such assets and may be collected from either the transferor or the transferee accordingly. Also, individuals who are tax Cyprus residents but are not domiciliated in Cyprus will be exempt from special defense contribution tax on dividends, interest and returns, and rents, as well as from in dividends distribution provisions. In order to understand this, I will illustrate you a small example. So if you consider John was born in London and that at the time of his birth, his father's domicile origin was England. John, however, is currently working in Cyprus, tax resident company from which he derives salaried income. John, he's a tax resident since 2015, and he's been living in Cyprus for more than 183 days. When he resides in a resident house in Limassol with his wife, both John and his wife do not have intention for a permanent or indefinite residence in Cyprus. John has also transferred a number of companies to Cyprus and is receiving dividend income from those entities. So the questions to be considered is whether John is a domiciled individual in Cyprus, and for what kind of taxes will John have to pay. So considering the discussion above, it must be the answer should be as follows. Well, John has not been a Cyprus tax resident for 17 or out of 20 tax years, and has a domicile outside Cyprus. So it is considered to be a non-domiciliated in Cyprus. All his dividends, though, interest and rent income will be extended from the special contribution defense. And provided that John will remain tax resident in Cyprus for 17 years, as from tax year 2015 and 2000 onwards, he will be considered a non-domiciliary up to the included tax year 2013. So, the final points to be considered in this presentation is the capital gain tax. So, under the new legislation in the area, gains from the sale of shares in companies which indirectly own immovable properties in Cyprus by holding shares in a company which owns immovable property located in Cyprus will also be subject to capital gains tax. There is a number of adjustments to the accounting profits that are required for deemed and distribution purposes, including for tax years 2012, 2013, and 2014, if the company has acquired in those years plant, machinery, or buildings, and the private motor vehicles are excluded. And these acquisitions should be for business purposes, and the cost of those assets will be deductible against the accounting profits of the company. The capital gains tax is the last point to be considered. First one is the abolition of the immovable property levy payable to municipalities. The municipality and income levy payable to the municipalities was abolished. The new immovable property law will be introduced, which provides for the imposition of tax based on a single tax rate, 1% on the value of the property based on the latest general valuation by the Department Lands and Surveys, and that is of 21st December 2013. And there's also a number of adjustments to the accounting periods required for deemed distribution purposes, including for tax years 2012, 2013, and 2014, if the company has acquired in those years, again, plants, machinery, or buildings, excluding private motor vehicles, for business purposes always, and the cost of these assets will be deductible against the accounting periods. So this is all in regards to the the tax system in Cyprus. And it can be said with confidence that Cyprus has one of the most favorable tax systems in the EU, offering many benefits to individuals and companies. In respect of the presentation, you can know all about us, ask any questions you may have on the presentation or our company. We are in the field since 2004, maintain a competitive position in the corporate market. We have solutions for varying complexities for company registration, legal and tax, associate assistance, the establishment and maintenance of composite holding structures. Our offices are located in Cyprus, Singapore, Russia, Ukraine, and Hong Kong. We aim to provide our clients with personal, cost, and effective and efficient services. Our services include company incorporation and maintenance, banking and finance, bookkeeping and accounting services, tax planning, IT and web services, software for business, web and marketing services, legal services, immigration services, license and permits. Our group has been extended to deliver custom recruitment services. Feel free to contact us for anything you need on the area. We can help you on this. And really important is to be introduced to our property project. We have a variety of properties, luxurious properties all over Cyprus. Feel free to visit our website and contact us, and we'll be more than happy to assist you in your new for your new house in Cyprus. This is our details. I would like to thank you once again for your attention. Feel free to call or email me on my personal email, Georgia Banagidi. You can see it on the first slide. If you have any questions of the presentation or how our company can be in help for you. Thank you once again and have a nice day ahead.